So we're going to work on Whitacre Company's stockholder equity section. And they had two events during the year. They declared a stock dividend in May, and they did a 2-for-1 stock split in November. And what we're asked to do here is to figure the new outstanding shares and the par value, and also the equity section at the end of the year after that happened. I just wanted to bring to your attention that it's not unusual to not have any cash dividends. It is unusual to have no net income. So they operated apparently at break even, meaning that they made zero net income, not a loss and not a profit. Their expenses exactly equaled their revenue from customers. And it's possible. It's just unusual. I just didn't want you to forget that most likely during the span between December 2016 and December 2017, there would be net income. And don't forget it, be watching for it. Obviously, the point here is to be sure you understand how the stock dividend and stock split impact equity. Okay, so let's start with outstanding shares. So we originally issued 60,000, and then we had a 15% stock dividend. So we issued 15% more shares. So that would be 15% of 60,000. So that's an additional 9,000 shares. So now we have 69,000 shares outstanding. And then that goes on for a little while. And then in November, we did a stock split, or they did a stock split, a 2-for-1. That means for every share you return, we will give you 2. So it basically doubles the number of shares outstanding. So then the 169 would become 138, double the 169. That's the effect of the stock split. That's a 2-for-1 stock split. 2-for-2 would not be a stock split. Just a typo. All right, the original par value was 10. When you do a split, you adjust the par value for the ratio of the split. Here's 2-for-1, so we would drop it in half. If it was a 4-for-1, we would drop it by 4. By a fourth. So you drop it in proportion to the number of shares outstanding so that the total legal capital would remain the same. That's the idea. So how does the stock split and the stock dividend impact our accounts within the equity section? Our contributed capital, our common stock, and paid capital in excess of par common, and also retained earnings. So a stock dividend is removed from retained earnings. If it's a small stock dividend under 25%, we use the market value per share as the amount to remove from retained earnings. If it was a large stock dividend above 75%, a 90% stock dividend or something like that, we would remove just the par times the number of new shares. It's just an accounting rule. There typically isn't something between 25 and 75%. There's not usually a medium stock split. There's usually a small one or a large one. And small ones are more common. So here we have a small one, and it was 9,000 additional shares. So we're going to remove from retained earnings 9,000 times the market value on the day it was declared, which looks like $20 a share. And so in the common stock par account, we can only ever put shares issued times par. So we have to put in here the 9,000 new shares times the $10 par. We don't have any discretion about that. That always must be shares issued times par. Paid in capital excess of par will be the 9,000 shares issued times whatever's above par. Well, it was issued at $20 a share. Par is 10, so 20 minus 10 happens to be 10, which I wish they hadn't designed it that way, because I don't want anybody to think that this 10 for the excess of par has anything to do with par. It's just what's above par. Stock split would not move any dollar amounts. The only thing you do with a stock split is increase the number of shares that have been issued and decrease the par. So there's no money dollar-wise that changes between accounts. So then the ending balance in these accounts would just adjust for the stock dividend, since there's no change in the monetary balances of any accounts for a stock split. And then you would add up, and you would see that stock dividends just rearrange the furniture in the equity section, but they don't change total equity. The individual accounts changed, but total equity did not. And stock splits don't change any accounts or the total equity. They do change par, and they do change the number of shares that are issued and outstanding. Let me know if you have any questions.